Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you in different attire than normal, than the tie and the suit. And I think this is much better because it's, of course, the eve of Independence Day. So first up, let me wish all of you a very happy Independence Day. If you're celebrating it early, tomorrow, of course, is a market holiday. We're coming to you, as I said, from the Motilal Oswal CNBC-TV18 studios. I'm Prashant. With me, my colleagues Nigel and Rima. Guys, good morning.
Hi, good morning. You know, this year, when we enter Independence Day, the entire geopolitical environment is a bit challenging. So let's hope we come out, we turn our challenges into opportunities, and India emerges united, strong, and self-reliant. Freedom we've inherited. But now it's time to take it forward.
Well, that's right. You're looking forward to the long weekend, right? I mean, 3-day weekend. And for those children who had a Thursday holiday, well, they've got a longer one. 4 straight days.
Is it a holiday?
For some schools, yes. As you're growing up as well, there were some schools. So you long for these kind of long weekends. I'll tell you what.
Told me this is the last long weekend.
Yeah, I think
so.
I think so. I think so. And
guys, there's a day to go. So,
and in September, there's no holiday. So, but besides that, talking about the markets and how challenging it is, I think today is the day you remember the big bull, right? Rakesh Jhunjhunwala, death anniversary as well. And he always said, right, in adversity, you know, you look to buy, you look to be invested in India's long-term story. So remembering the great man, may his soul rest in peace.
Absolutely, and I think that's a nice tribute, Nigel. Let's just, as always, take a quick look at where things need to, what you need to know as we start another session, right? You basically have, and I want to start with not what happened yesterday evening, but what's ahead of us. And it's basically two things. One is the Trump-Putin meeting, and I'll talk about this in a little bit in greater detail. But equally important now, which was not in the mix a couple of days back, is Prime Minister Modi's Independence Day speech from the Red Fort in Delhi. The second one, PM Modi's speech, especially in the context of where we find ourselves, a bit of a tough spot, back against the wall. And I know it sounds cliched and everything, whether, another wave of reforms, and some have said the 91 moment. Well, don't go that far, but I think another leg of reforms, I think, would be pretty welcome to basically unleash entrepreneurial forces and, of course, help job creators in that sense, because that is the need of the hour. The first one I'll get to in just a bit. But before that, let me just quickly recap overnight action, which is not very much. S&P was up about 1/3%, NASDAQ 0.14% higher. Small caps, by the way, last 2 or 3 days have been doing a little better. So you look at the Russell 2000, it was up 2%. So large cap tech has been outperforming. Small caps have been doing much better. Macro markets, 10-year yield, 5 basis points lower. Dollar index was down about 0.4%, 97.7. I mean, that's a big one, right? And day before yesterday. So this week, actually, we've lost, 1.5% so far on the dollar index. The broader dollar, that's quite consequential. Oil prices, 65, just under $66 a barrel is where we stand. CNBC, in the US, reported that 11 candidates were in the running for the FOMC chair, which is, essentially a replacement to Fed Chair Powell. Remember, Fed Chair Powell's term only ends in, I think, May of next year. So he's got a while to go. President Trump, though, after that report aired on CNBC, came out and said that, the Fed Chair pick was down to 3 or 4. So CNBC said 11, and Trump said that, well, it's down to 3 or 4 picks. Actually, it's not about, who. Of course, it matters who. But I think what matters more at this stage is when. When is the announcement? Because if the announcement is now and somebody's going to do backseat driving, if, say, for example, they announce that so-and-so is going to be the new Fed chair, what happens to all the subsequent meetings where Fed Chair Powell is essentially, will he be able to hold sway? Will he be able to do what he wants to do in terms of policy decisions, etc.? Or somebody essentially else is going to be doing some backseat driving? And that's essentially the concept of the shadow Fed. So it's when more than who at this point in time. So we'll see. The other next point, of course, is the Trump-Putin meeting tomorrow. And here, Trump spoke with European leaders and Ukrainian President Zelensky yesterday. Latest headlines suggest that a good outcome, I mean, a great outcome would be a deal tomorrow, right? I mean, for peace. But if you just parse through the headlines, etc., I think you need to dial back expectations a little bit, because it seems like tomorrow's meeting is being projected now, I think deliberately so, as a bit of a scoping the arena for what is possible. And then the headline suggests that there perhaps is a trilateral meeting between Ukraine, US, and Russia towards the end of next week, potentially, possibly, hopefully. So expectations for what can come out tomorrow in terms of an actual signed and delivered deal, I think have to be dialed back, because that is essentially what we're picking up from everything which is out there. So I'll just circle and tie in the levels here. Yesterday, of course, the market came up, but we're still not out of the woods. I mean, the inclination is for the market to go higher than as compared to lower. But you got to clear these resistance levels, right? The first one is 24,702. After that, the 20-day moving, by the way, we didn't clear it yesterday, 24,702, which is the high day before yesterday. If that gets taken out, the next resistance is 24,782, which is the 20-day moving average. And then you got the 40-day exponential, 24,840. All these levels within about 150 odd points in the Nifty is very, very close by. And that's the reason why I'm putting this out. Support for the Nifty, 24,337. Bank Nifty resistance zone is 55,582 to 55,652. And the support here is at the low of 54,905. Gift Nifty gives you a quick sense of where we're likely to start. Absolutely unchanged. 5 or 6 points lower as we go into this long weekend holiday tomorrow. Rima.
Truncated week, long weekend, and plus we've got the Nifty weekly expiry today.
Yeah.
But it's a flat opening for the Gift Nifty. In fact, Asia too is very, very quiet. Nikkei is retreating after hitting record levels yesterday. So the Japanese market is a cut of about over 1%. Hang Seng is up about 0.5%. Taiwan is down. So it's a mixed picture across Asia this morning, but it's been a winning week for Asia broadly. Big gains seen in Hang Seng, 3.5% up so far. You've got the Japanese markets, despite the correction today, rallying more than about 2%. And the Indian markets too, so far, are up close to about 1%. In terms of the other big headlines, Trump has signed an order to ensure resilient supply chain for essential medicines in US. So he's basically signed an executive order for essential medicines by filling the SAPIR, Strategic Active Pharmaceutical Ingredients Reserve, with critical drug components. So it could impact API makers. We'll have to wait by to see on India. But the goal is 6 months supply, of the key drug ingredients to be stored domestically. So pharma will be on our radar. Also for China, interesting news coming out that they have experienced negative net new loan growth for the first time in 20 years. Basically, the amount of loans repaid by the households and businesses exceeded the amount of new loans issued. This hasn't happened in the last 20 years, and it happened in the month of July. So it questions, the confidence that households and businesses have in the domestic economy, that the loans repaid exceed the new loans that they want right now. In terms of flows, the DII's net bought 5,600 crore in the cash market. Yesterday, the FI sold about 3,644 crore. In terms of what to watch, as I said, Nifty weekly expiry today. ICICI Bank has lowered the minimum balance requirement to 15,000. There is that big JSW cement listing. Subscription was pretty strong. It was a large issue, 8 times plus in terms of an overall subscription. And even electronic makers, because there was this 90-day waiver. Electronic exports from India to the US were not tariffed. There was a 90-day window exemption, and that expires today. So are we going to see an extension of that window of relief? That remains to be seen. And in terms of big earnings to watch, Glenmark, Ashok Leyland, and IOC. And earnings reaction we'll get to in our top 10 segment. But Nigel, what are you looking at?
Well, let's keep an eye out on the weekly expiry. The second half of trade will be volatile because today you have the weekly expiry that will play out for the Nifty contracts as well. And we're bracing to break that losing streak. Remember, 6 straight weeks the Nifty has ended in the red. Today we need to defend this mark to break that losing streak and in fact end mildly in the green. So let's hope that does happen from a bullish perspective. The problem in the last 1 month has been the Nifty Bank. So yes, the Nifty has lost close to around 2%, but the Nifty Bank actually after leading has underperformed. It's down close to around 3%. And even yesterday's trade, though we ended higher, the Nifty Bank underperformed, and there are mild shorts that are getting added into the system. And the index that's more shorted actually is the Nifty Bank, because yesterday as well it underperformed, and you did see some addition in terms of open interest. For the market on the whole, well, if you look at what the FIs did, that short covering bounce actually is still awaited. They're holding on to the short positions, very, very meager shorts covered yesterday, 866 contracts, that's hardly anything, and they continue to remain at around 91% net short. So the markets are net short, the FI is aggressively net short, they're holding on to that short position. Well, in fact, if they get caught on the wrong side, that'll be interesting to see how things play out from there. But in yesterday's trade, well, if you look at the puts, there were more puts that written than calls, both for the FIs as well as clients. So that's giving you some hope that maybe the near-term low, or the 200 DAB, at around the 24,100 odd, will hold out. And the options data should come up for you on the screen, because yesterday we saw aggressive writing. 24,600 put, 24,550 put. Now, these put writers, they are looking to eat into this premium. Yesterday, at least, this premium was down by 40 to around 60% in trade. So they are looking to eat into this premium, and they're hoping that the lower levels do get protected. So let's get the levels up for you on the screen. Well, crucial support comes in at around this 24,450 mark. That's the important mark you're looking at on the downside. The resistance comes in at around 24,750, and the 20 DMA as well in that vicinity. So this is the crucial resistance mark, while support comes in at around 24,450. In terms of stocks that I'm looking at, well, let's see whether or not PVR will be the stock in focus, because you have two big releases. We have Rajnikant's movie that will be releasing, as well as you have War 2. And, the pre-booking was pretty okay for both those two names. So we'll keep an eye out on PVR ahead of the long weekend, whether or not people find their way to the cinema halls. And the other one I'm looking at is PNB Housing Finance. I've been making this point that the open interest gradually is coming in lower on PNB Housing Finance. So it had moved into the F&O ban. The total open interest needs to shed by around 2.5%, and then it could possibly come out of the F&O ban. So that's a stock I'll continue to keep on my radar.
All right, Nigel, thanks very much for that. Mark Franklin is Deputy Head of Multi-Asset Solutions Asia at Manulife Investments. He's with us. Mark, good morning. Great to have you with us here. Looking at the headlines, basically out of Russia, Ukraine, and the meeting tomorrow, should we dial back expectations for an announcement tomorrow, Mark? Eventually, something may happen, but out of the first meeting tomorrow, you think we should keep hopes a little lower?
Good morning. The reality is that it's a very complex situation. There are objectives on the Russian side which clearly don't overlap with the objectives on the Ukrainian side. It's not just about striking a deal, even if it's verbally communicated. It's also the nature of the deal and the extent to which all parties feel that it can hold. In general, though, if the musings coming out of the meeting are somewhat positive, it could be in the short term helpful for risk appetite across global markets. And it may actually serve as a bit of a disinflationary tailwind for those types of exposures which people have built into as a geopolitical hedge or an inflation hedge as well. And then the opposite applies if there's no seeming breakthrough from the conversations tomorrow.
The street is hoping for a breakthrough, because then the hope lies that the secondary tariffs on India for procuring Russian crude oil can be lifted. So that additional 25% could go away. So we'll be watching that very closely. But generally, the geopolitical dynamics between US and India have been a bit unfavorable. And the FIs we've seen relentless selling pressure by the FIs. What's the view now on India?
It's a great question. So there was one school of thought saying that India is a very much a domestically driven economy, not as sensitive to global trade dynamics as other markets, and therefore somewhat immune from the tariff regime that we're now moving into. But the other way to look at it, of course, is that the US is very keen for the Indian government to open up domestic market access to foreign players, to imports. And so equity market constituents have perhaps more to lose from that opening up. And that's probably been a bit of a headwind for Indian equity market sentiment in the recent days and weeks.
Hi, Mark. Good to see you. When we chatted last as well, you said you had your neutral stance on India. Now, we have underperformed for the last many months. Do you think you're gradually believing that it's time to get into India? And also, what are you reading in terms of the economic activity here in India? I recall we had chatted about the credit growth not picking up. And that continues to remain a bit of a sticky point. But the hope is that that picks up. So your reading of the Indian economy, and do you think the Indian markets are coming to those levels when you want to gradually shift that neutral stance?
The two factors are somewhat intertwined. You need some kind of macroeconomic catalyst, a re-acceleration to drive flows, both domestic and overseas, into the Indian equity market. We still officially remain neutral on India at Manulife. one of the things that is incredibly helpful for policymakers is both CPI and WPI inflation really moving in the right direction and creating room for policymakers to cut rates. But the RBI, to some extent, rightfully so, points out that a lot of the disinflationary forces are coming from the food sector, and the potential is for that to reverse at any point and without much warning. So they still remain somewhat cautious, but clearly the more they feel able to cut rates aggressively, the more it has a chance to reinvigorate credit demand and then rebuild a new credit cycle in India. But for the time being, loan growth does remain somewhat sluggish by historical standards, not in absolute terms, of course. And that also explains why the Indian banks have somewhat lagged the market in the last month or so.
Absolutely. Mark, we'll leave it there. Thank you very much for joining us. Good speaking with you here on CNBC-TV18. It's a quick word coming in as far as markets are concerned. We'll take a quick commercial break here. We'll come back with our top 10 list of stocks to watch out for in just a bit from now. You'll also have lots of managements joining us. The first at 8:35 will be Sami Hotels, and we'll discuss the quarter gone by. At 9 o'clock, we'll have the management of CSB Bank, which will be with us to talk about their first quarter performance. 9:20, Manishi Chaudhary will be with us to talk about Indian markets. 9:30, Muthoot Finance, there is an upgrade as well. Stock should do well. Max Healthcare will be with us at 9:40 to talk about the hospital's business. Abhay Soi there. NHPC 9:50 on their first quarter performance, and towards the end of the program, Lata discusses with economist Aditi Nair and Bandhan fixed income head Suyash Chaudhary if Indian bonds are crashing because of fiscal deficit fears. Stay tuned.
And we slip into a short break. On the other side, we go full tilt on the top 10 stocks that we're looking at. For the time being, I'll run you through the list. BPCL, United Spirits, Muthoot Finance, Jubilant Foodworks, IRCTC, all of them will be reacting to positive news flow. Add to the list, Endurance Tech, Vishal Mega Mart, and Infosys. While on the flip side, Deepak Nitrite as well as ABFRL will be reacting to negative news flow. Take that break, come back, we get into further detail on all of these names.
Welcome back. Let's talk about stocks. Our research team is standing by with CNBC-TV18's list of top stocks for the day. And let's begin with BPCL and the numbers. Sonal joins in. Hi.
Good morning, Reema. Well, good set of numbers coming in from BPCL. It was a top-down beat. Revenues increased versus an expectation of a decline. EBITDA was up 24%. We saw margins increasing to 8.6%, and profits were higher as well at 6,123 crore rupees versus a poll of 5,500 crore rupees. GRMs, though, lower than what the street was working with, and on a quarter-on-quarter basis. This beat was actually led by the marketing segment, where marketing volumes also increased, and so did the margins. Morgan Stanley has an overweight rate with the target price of 406. They say it was a beat versus the consensus as well, and if they adjust for inventory losses, the earnings were even higher, so they remain positive on the stock.
All right, Sonal, thanks a lot for that. Sonal, where's the smile? It's the end of earnings. I thought you were going to be, end-to-end smile out there finally. But Mangalam's giving us that, and Sud as well as Gaurav. Mangalam, tell us, you're going cheers all the way?
Cheers all the way for United Spirits, Nigel, this time around. The EBITDA has come in at 415 crores. The street was working with a number of 417 crores, so no problems out there. Margins at 16.3%, and thereafter, the net profit as well, mildly below expectations, but that's because of an exceptional loss. In fact, on the operational front as well, there is a one-off. So the company said that excluding the one-off, the EBITDA margins would have been 17.9%. That would provide a bigger kick to, the watchers of the share more than anything else. Even the volumes, Prestige and above, the volumes were up 9%. The street was expecting 5 to 6%. Popular volumes were up nearly 11.5%. The street was working again with a range of 6 to 8%. Total volumes up near double digits. So these are reasons for cheers for United Spirits. What we already knew were the revenues for the company coming in at 2549 crores versus 2352 crores, which the company had revealed in their first quarter update itself. So operationally, it's a strong brew.
Absolutely. Mangalam, thank you very much for that. Muthoot Finance is the next one in focus. Gaurav is here with details. Gaurav, good morning.
less. When we look at Muthoot Finance, very strong set of numbers and the beat across all the segments. When we look at AUM growth, that was at around 42% on a year-on-year basis. Now it stands at 1.2 lakh crores. When we look at net interest income, that increased almost by 50% on a year-on-year basis. This was higher than the street's expectation, and this was led by 400 crores of extra income, and this was because of the recoveries from NPA and as well as some principal received because of the ARC. Other than that, PPOP that grew almost by 60% on a year-on-year basis, again stronger than the street's expectation, and this was also led by the other income segment. When it comes to profit, now it has increased, it has almost doubled, it has increased almost by 90% on a year-on-year basis. This was again higher than the street's expectation, almost 22% higher than the street's expectation. And when we talk about some ratios now net interest margins, they have expanded almost by 88 basis points on a sequential basis. Now this was because of the 400 crores of extra income, and at the same time credit cost, which defines the asset quality, that has also come down to 0.2% versus what it was at 0.5%. This was also stronger in terms of the expectation. So definitely all in all good set of numbers. We also saw brokerage is actually upgrading. We have got Morgan Stanley who upgraded the target price as well as rating. So definitely positive set of numbers from Muthoot Finance in this quarter.
Indeed, Morgan has upgraded it to an overweight. Their target price stands at 2,920. For CLSA, target price 2,740. We've got the management joining in 9:30 a.m. for their Q1 earnings fine print. Mangalam is back with us. Jubilant Foodworks and IRCTC. How are the numbers?
Well, good performance coming in from Jubilant Foodworks as well. The EBITDA 323 crores. Again, the street was working with the numbers similar to that, and the net profit as well, closer to 66 crores. The expectations were that of 65 crores. So absolutely in line, but the internals are strong. Consolidated revenue growing 17%, standalone revenue growing 18%. This is something that the company had apprised the street of in their first quarter update. But the Domino's India like-for-like growth coming in at 11.6%, led by delivery like-for-like growth of 20%, is something that the street would be positively surprised by. Delivery channel revenue itself grew by 24.5%, which implies that it's actually faster than all the other food aggregators. So they've continued to gain market share, and delivery now accounts for nearly 73% of their sales. And if you're looking beyond pizzas, Popeyes as well, double-digit same-store sales growth in South India is a recent addition to their portfolio with quarter-on-quarter improvement in profitability. So things baking well for Domino's or Jubilant Foodworks. For IRCTC, the reported numbers are soft with a revenue growth of 3.5%, EBITDA growth of 6%, and a net profit growth of 7.5%. But the key, driver of growth for the company is the ticketing business, and there the performance is strong. 9% growth in their revenues and 10% growth in the EBITDA, margin expansion as well. So I'm going with green on IRCTC and Jubilant Foodworks.
All right, Mangalam, and I'm hopefully going with the pizza later today, from Jubilant Foodworks practically. Let's hope, Mangalam, you oblige.
Well, we'll take a call on that.
All right, let's hop across to Sudarshan. He's here to tell us about Endurance Tech. Sudarshan, you're looking like the man who's relieved that this earnings season has come to an end. Looking forward to the long weekend. For the time being, tell us about Endurance.
So another auto ancillary companies after Bellrise Industries and Minda, Endurance Tech has come out with a strong set of numbers for Q1 FY26. Operating numbers have seen a double-digit growth with revenue rising 18%. EBITDA 2 has seen a jump of almost 19% and holding on to margin steady above 13%, at the same level as Q1 of FY25. Now, company continues to see outperformance from the Indian operations, where Indian operations form around 70% of total sales. And in Q1, it has outperformed the industry. Two-wheeler volumes, if you see, it had seen a decline of nearly 2%, while company's standalone revenue has seen a growth of almost 10%. European operations, too, has seen a growth of 29%. That includes Stoffrel acquisition. If you remove that acquisition, the growth is just 1%. Now, going forward, what will be the growth tailwind for the company? It says that recent government's announcement of mandating anti-lock braking system for the two-wheeler companies would be a growth tailwind, and that's the reason it's going to see a further growth. But as far as earnings are concerned, it's a healthy growth that company has seen, and that's the reason I'm going with green.
All right, going with green. So thanks very much for that. Vishal Megamart is next. Mangalam, over to you.
Good performance for Vishal Megamart as well. 21% growth in their revenues, 25% growth in their EBITDA, implying a margin expansion of nearly 50 basis points, and the net profit on the back of that growing by about 37%, also aided by higher other income. Same-store sales growth here as well, similar to Jubilant Foodworks, 11.5%. Gross margins improved because the contribution from their own brands came in from 74% to around 76%. So that's a positive. And store expansion continued as well. So Vishal Megamart is good. Nigel asked for pizzas from Domino's. I wonder if he wants anything from Vishal Megamart now.
No, we'll stick to United Spirits, Mangalam. Thanks a lot for that. But let's go back to Sonal. She's here to tell us about Deepak Nitrite. Sonal, not asking for anything, but I'm hoping to visit your home over the weekend and get some blessings, from Lord Krishna. But tell us about Deepak Nitrite.
Oh, absolutely. You have to be here, Nigel. But talking about Deepak Nitrite, it was a weak set. And this is something which is surprising because other chemical companies have seen an improvement in Q1. Revenues down 13%, EBITDA down 39%, margins lower by 400 basis points, leading to a profit decline of 45%. It was led by the advanced intermediate segment where the EBIT halved on a YOY basis. Phenolics also saw a decline to come in at 118 crore rupees. The company says pricing pressure continues because oversupply coming in from China and some sectoral pressure as well. So going with red on Deepak Nitrite.
Thank you very much for that. I'm watching Infosys today because the company has approved the acquisition of a 75% acquisition of 75% shareholding in Versant Group, which is an Australian-based company. They will be paying about 233 million Australian dollars. That turns out to be about 150 plus US dollars. The acquired company had revenues of about $210 million, according to analysts. Assuming that they get a 2-quarter benefit of this acquisition, it should add about 0.3% to their top line, and it will strengthen their presence in Australia. In terms of the overall cash balance that they will use, it will just be about 3%. So that's Infosys making inroads in Australia and New Zealand. But let's talk about Aditya Birla Fashion, Vinny. How are the numbers?
A weak set of numbers, Rima, that's coming from the company this time. Overall, missing the estimates of what the analysts were expecting. Now, in terms of revenue, just a 9% growth this time. EBITDA, 24% growth, slight bit of an expansion, 75 basis point expansion in terms of EBITDA. But the company's losses have widened this time. 211 crores is the loss versus 161 crores last year the same time. Now, demand has been very sluggish. That's what the company highlighted. They're saying that pantaloons, which is the main business for the company now, that's seen a decline of 1%. And that was because of the shift that has happened in the festive season and Eid that was a bit later. So that is what impacted the sales. Like-to-like growth for pantaloons, that has been flat on a year-on-year basis. Now, ethnic business, that's where the company saw some growth coming in. 25% growth there. The designer brands that they have, right? Sabyasachi, that's managed to see a very good growth. 56% growth there. Double-digit profitability. But the main business, pantaloon business, that didn't do well. Tomorrow, that is also a brand of the company that delivered a good growth as well. But these are smaller parts of the businesses. So that even such a good growth is not something that is overall improving in terms of the revenue growth for the company. So all in all, we're expecting red for the stock today.
Thank you. Let's do a quick recap then of the top stocks. Stocks with positive news flow are BPCL, United Spirits, Muthoot Finance, Jubilant Foodworks, IRCTC, Endurance Tech, Vishal Mega Mart and Infosys. Stocks with negative news flow, Deepak Nitrite and Aditya Birla Fashion and Retail. Well, let's talk commodities now. Manisha is now joining in to round up all the news over the last 24 hours. Manisha, what happened when we were all sleeping in your markets?
Well, early morning we're looking at some support coming in for the crude oil prices, but it's still not too far away from the 2-month lows that it has been trading for the last few sessions now. Well, the U.S. inventories have risen by 3 million barrels, way higher than what the street was anticipating. And then whether it has been about the IEA, EIA, OPEC, all these international energy agencies are talking about a surplus in this year and the next as well. The IEA also says that the U.S. inventories are expected to rise at a record pace to a 46-month high by the time it's mid-June 2026 there. So everybody is working with higher supplies there and an optimism around U.S.-Russia meeting on 15th of August. That is what is keeping the crude prices in check. But what has been doing well has been the metal prices. So whether it's iron ore, steel prices trading at a multi-month highs, copper is finally risen as well. It's trading at a 2-week highs right now. There is optimism over global trade improving, and the U.S.-China trade truce extended by another 90 days really seems to have done well for the metal prices in this week, where almost all metals seem to be heading for a stronger close.
All right, Manisha, thank you very much for that. So that's Commodities in Focus. We'll come back in just a bit from now and we'll connect with the management of Sami Hotels to discuss the quarter gone by and get an outlook as well. Deepan Mehta of Elixir Equities also joins in for some fundamental stock conversation. Stay tuned.
Welcome back. Well, let's focus on Sami Hotels. They've delivered their numbers. We're now joined by Ashish Jakhanwala, the MD and CEO at Sami Hotels. Hi, Ashish. Good morning. Good to see you. And I'll tell you what, I was scouting for places to go over this weekend. It's chock-a-block, anywhere. And I'm fearing actually the drive someplace because coming back will be even more difficult. That said, tell us, how has growth been? Actually, we are almost halfway through the second quarter. First quarter looks pretty okay. July and August kept up with the momentum and things get better from here on?
Yeah. Hi, Nigel. Good to have you. Good to have me on the show. We had a very good April and June, and May, of course, because of the known reasons best known to everybody, was slightly flattish. But we've seen the momentum continue through July and August. So we actually remain fairly upbeat about the remainder of the year. As you rightly said, the demand is just not letting up, and I don't expect it to, given where India is headed. So be ready to plan your vacations well in advance, otherwise you'll keep complaining.
The momentum is as strong, you're saying, Ashish?
It's as strong.
Because in Q1, there were a lot of cancellations, obviously, right? I mean, across, not just your chain, but across.
Only in May.
Only in, yes.
Only in May.
Yeah. But you think all that has been made up and it's kind of back on track?
Yeah, so if you see, we have presented a slide in our presentation which says that April numbers were up about 13%. May was at about just 3.5-4% over last year. June went back to about 12% over last year, and we've seen that momentum continue since then. So the recovery was pretty quick after the incidents that happened in May, and we actually therefore remain quite upbeat for the rest of the year.
And bookings for the third quarter, which perhaps is the strongest for you, that is coming along nicely already?
Listen, a little early. The business, unfortunately, is not that long lead for business hotels anymore. You get short lead businesses. But what we call business on books or pace or trends that we are seeing remain to be in double digits for this year over last year.
Is that the kind of growth we should expect? Double digits, mid-teens kind of a revenue growth? Because Ashish, as the company expands in size, even the absolute revenue growth has been coming down. So while Q1 was about 10%, last year 18% revenue growth, FY24 was a 30% revenue growth. The year before that was more than 100%. I get with size, it's harder to keep growing at the same rate, but what are we looking at for FY26 and FY27? A mid-teens kind of a revenue growth? Is that the sustainable run rate?
Yeah, so let me clarify. For an acquisition-led company like ours, the base that we inherit for the previous year always sets the tone for the headline number, right? Therefore, we've always highlighted same-store growth, and our guidance on same-store growth has always been between 9 to 11%. But then we have some new inventory coming online this year, as in some large hotels, and combined impact of same-store and new inventory will help us deliver about a mid-teen total revenue growth.
Mid-teens. Okay. Can you tell us a bit about your pipeline expansion for this year and next year?
So we've already launched a few hotels at the beginning of this year, and hotels do take a quarter or two before they start stabilizing. So we have a new hotel in Calcutta which opened a few months back. We've got a hotel in Greater Noida which got rebranded and has reopened, so that's ramping up. Around October, we opened new inventory in Hyatt Regency Pune and Sheraton Hyderabad. Plus, we have a lot of work going on in food and beverage. So we have some ballrooms under renovation. So H2, we expect to really see the impact of all that inventory addition reflect in our financial statements.
Okay, all right, Ashish, couple of quick questions then. The debt number has come down post this GIC deal. Current debt and where is it headed for the full year? What kind of finance cost savings would be there?
So that's where I think we are, I like to believe we're delivering ahead of a promise. After we had concluded the GIC transaction, we had indicated that we target coming below 3 times at the end of FY26. Happy to say that we have come down to 3.0 as of today. So the path towards going below 3.0 is really almost there for us now. So I think that's one really good momentum. And I think we've articulated our strategy to recycle capital. People sometimes think it's selling. Actually, it's not selling. We need to make sure that our capital is in assets which give us the highest returns. So we expect to accelerate our journey towards the intended path of 2.5 times net debt to EBITDA. We've always said that because we can access 12 to 15 years financing, 2.5 times net debt to EBITDA is extremely safe zone. And I think I'm happy to say that we'll be there much sooner than we had expected ourselves to be, both because of good earnings growth, two, because of the capital recycling, both what we did with GIC and also at a single asset level.
Okay, all right. And one of the reasons that the company wasn't getting the multiple was because of the debt in the books. Now you're addressing that, and that's why the stock has perked up. It started outperforming actually in the last few months. That said, any other deal with GIC, any kind of value unlocking that you're looking at? And is there any kind of, any hotel that you've, marked that maybe you want to get rid of it? So any deal with GIC and any hotel that you want to sell?
No, so the intent with GIC is clear, and it's communicated that we want to create that to be a very large upscale platform. We still have a few more upscale hotels which are in, let's call it SAMI. And I think at the right time, we may discuss with GIC, subject to their agreeing, transferring one or two more assets to that joint venture. But that will largely be to really ensure that that platform is well funded for a significant growth in future. So answer is absolutely yes. We will keep evaluating, what other assets we can transfer to the joint venture, recycle our capital. I must say that we are getting some really exciting opportunities for deploying capital. If you see over the last 2 years, we've sold assets. If you look at GIC monetization, about 750 crores, single asset sales, about 200 crores. We have monetized about almost 1,000 crores. And at the same time, we've committed about 1,000 crores in new capex. So all we are doing is making sure that, for instance, our asset sales have been at about 20 times EV/EBITDA average. And wherever we're deploying capital is at almost 15-16% NOI yield. So it's a big shift in how the returns will stack up in future.
All right. Wish you all the best, Ashish, and wish you a good season as well. Thanks very much for joining us here. That's Sami Hotels in focus there. Deepan Mehta is with us with quick thoughts on what the market may do. Deepan, good to have you here. Two things tomorrow, right? Even as we go into that long weekend. Prime Minister Modi's speech at the margin, some expectations that maybe, he will outline what he wants to do next because of the situation we find ourselves in. The second, of course, is this meeting in Alaska, where I think if you read the global media, it looks like you've got to dial back expectations of a breakthrough after the first meeting. It was looking pretty big, but I think they've themselves watered it down a little bit. Don't expect too much. So near term, Deepan, what's the market direction looking like to you?
Yeah, good morning, Prashant, and thank you for having me on your show. I think the same trend, sideways movement, because liquidity is not letting the market sink and fundamentals don't justify markets to move up. So that's where we are. And I think largely the market and the corporate India is absorbing and understanding how these tariffs will work out, because it's not just the direct impact of exports to US, but the overall competitiveness of the Indian exporting community, because it may impact even revenues from other geographies, because we are constrained from selling to the US. So there are a lot of moving parts over here. And on the whole, this earnings season also has not been that great for the reasons that we all know. 5.5, 5.6% type of aggregate net profit growth, lowest in last 2 years, is certainly not impressive. But I think that the festive season has started on a good positive note. Even FMCG revenues have picked up, volumes have picked up over there. So we remain hopeful, because the only way this market can go back to its old highs is we have a strong rebound in earnings.
A couple of numbers today are also pretty good. Jubilant FoodWorks is, for Domino's India, like for like, growth is in double digits. For Vishal Mega Mart too, for the 5th straight quarter, it's reported a double-digit same-store sales growth. So some of these numbers too are showing a pickup. Deepan, morning. I think you like Apollo Hospitals. That's a part of your portfolio?
Yes, it is.
Yeah, big move yesterday.
It's one of the few companies which have brought a smile to our faces in this particular quarter. I think exceptionally good numbers. And now they are firing on all cylinders. Losses have been curbed. And most importantly, looking forward to the split which they are doing in the company. I think that will unlock even more value for minority shareholders. Only thing I think that investors should keep in mind is that they are entering into a very aggressive period of expansion of hospital beds. And whenever that has happened in the past, it does tend to impact the profit margins, because the new hospitals are not immediately profitable. And although the management will give the split between the new hospitals and the old hospitals, but nonetheless, I think that we should be entering a period of investment phase for these new hospitals, which may impact the hospital business revenues, not revenues, but at least the operating profit margins. So we need to keep that in mind, that these results are good, but we're in for some curtailment or pressure on the margins as new hospitals go on stream.
Deepan, haven't met you for a while actually, and even Junior Mehta, maybe it's time to grab a drink or maybe a pizza. We'll see how that goes, but we should do that shortly because I haven't met the junior as well. But that said, what's the view? Jubilant Foodworks as well as United Spirits, both of them came out with a set of numbers. Your take?
See, I think United Spirits is now passé because the way the Indian alcobev industry is doing, they are really doing exceptionally well as compared to United Breweries and even United Spirits for that matter. We look at Radico Khaitan, the numbers which came through, Tilak Nagar Industries, Allied Blenders, Associated Breweries. Across the board, I think Indian alcobev industry is really surging. And it's a good place if you want to place a bet on the FMCG side. I would say that these are the kind of new FMCG companies that investors can focus on. So I would avoid United Spirits, go for these local alcobev companies. And Jubilant Foodworks, I mean, from time to time, 1 or 2 quarters do come which are exceptionally strong. But this entire quick service restaurant business doesn't look to be as optimistic as before. There's a lot of competition from the likes of Swiggy and Zomato, which have now placed a whole host of dark restaurants and smaller restaurants at par with the likes of Domino's and other quick service restaurants. So I would prefer to avoid these companies. And in any case, I think they're trading at extremely rich multiples. And now a lot of the revenues for the QSR companies is coming from outside India, where markets may not be as robust and as vibrant as they are in India.
All right. Deepan, we want to discuss one particular name and listen in and come to you. I don't know if you have a view in particular. I'm talking about Merc Electronics, MIRC Electronics. Now, most of us would know this as the Oneida brand. For many of us, it was basically the first piece of television, Oneida, the man with the horns, right? And they've yesterday, by the way, the stock has gone from 15 to 26, 70-75% in 7 or 8 trading sessions now. Nimish told us a couple of days back that Merck is going to raise money, is going to do a pref issue to some high net worth individuals, etc., an attempt to revitalize the company, and the announcement came through. They're raising 150 odd crores via a pref issue. Nimish, morning. Congratulations. First up, tell us more.
So, Prashant, as you rightly pointed out, very old company, not done much in the last many years. Finally, it looks like they're waking up. They want to make some changes. So first, the big announcement which came last evening, that is a preferential issue to 4 investors. They're raising 150 crores by giving 8.89 crore shares to 4 investors, basically on a pref basis, and they're raising 150 crore rupees. So that's a big announcement which has come over the night. So again, very small company, 750 crore market cap and raising almost 150 crores. So these 4 investors combined will now own close to 24% stake in the company. Of course, it's a pref, so the conversion will take over a period of time, but money will come into the company in months and days and months to come. So that's a big announcement. As you rightly pointed out, Prashant, very old company we've been seeing since our old age, but nothing has happened in the company, right? I mean, if you look at the numbers also, I was just looking briefly on the screener. For the last 10 years, they've not made profit. Only barring one year when they made some 20 odd crores of profit, it's largely been loss-making. Again, I think that is a big issue for them, sitting on 500 crores of debt as well. But
is pretty, they do 750 odd crores in sales, top line.
Yeah, exactly.
And market cap is 750 odd crores.
Correct.
But as you say, they've not been profitable.
So maybe, what investors would have thought is they're getting for less than one-time sales, right? That could be the one big trigger. And also the fact that, now these investors will own close to 24%. Yeah. They can make some calls, make some changes in the board as well. Also, they have a manufacturing facility. So for many years, there was an anticipation that one of those OEMs may look to tie up or acquire and use that facility. So maybe all this could be on the cards going forward. But the fact is that 24% is bought by four market investors, and they're putting in 150 crores in a company which has not done anything in the last 10 years. Just to note that very small company, and also they have a debt issue. So that's something which, again, not only this particular fundraising, I was just looking at the last few announcements. Apart from the pref issue where they've raised 150 crores, only in the last few months, they've done a couple of further fundraising as well. A rights issue, they've done a 4.5 crore shares rights at a price of 10 rupees. So that money is going to come in. And also they did an NCD issue of 60 crores. So they've done some fundraising activity in the last, say 3, 4, 6 months. So they have capital now. Again, allocation would be important. But the fact is that 4 investors have come in and picking 24% stake, putting in money, 150 crores. Just need to see how it pans out. But again, it looks like there could be something on the cards as far as reviving this brand and reviving this company is concerned.
And the next thing to watch will be getting new people.
Absolutely.
I mean, who's going to run the
business?
business?
Getting a new team, I think that would be on the cards, right? Yeah. They will hire some new team. Yeah. They'll hire people from the industry. Yeah. Also, as I said, there could be a potential tie-up with one of the OEMs to use the facility as well. So I'm sure if these 4 investors are coming in, they would have something on the sleeves as far as plans to revive this company. So
absolutely.
We'll have to wait and watch. But yeah, the big announcement is 150 crores raise by Merc Electronics.
I was thinking, Animesh, and this is something you alluded to earlier as well. A completely different context, but in a way, there's a common thread. We reported that Samman Capital thing, right? I mean, a lot of these, it kind of tells you whether beaten down companies, maybe cheap companies, people going in, trying to engineer a bit of a turnaround. I mean, similar kind of thought process. Different businesses, much larger,
absolutely.
Of course, that one.
And that's happening, right? And the other thing is that now a lot of these big investors are having this firepower and money power to go in and revive and look at taking a board seat. And also I'm sure with this 24% there could be board changes, board seat as well, maybe a new CEO or a new team to take this forward. So we'll have to wait and watch, but at least the news is that 150 crores has come in from 4 investors.
Good intent. Let's see whether or not the retail audience does make money, because in the past as well, when the promoters have tried, I remember 2018 when they came to the studio as well, and they promised a lot. Delivery was a little bit short. This time around, they're looking at a fresh leg. Money is coming in and marquee investors. So let's see how that goes. But if you look at it from 2018 onwards, it had gone to 55 rupees and it's still half of that price, though it's had a big run in the last few days.
I mean, the other point, which I began by saying, the stock's up 70-75% in the very near term. So,
and also in terms of numbers, it's loss-making. There is nothing in terms of, obviously there is a top line, but
just a FYI for viewers.
They're sitting on debt as well. So,
absolutely. Nimesh, thanks very much. But it's an interesting story worth tracking. Deepan is with us. I don't know if Deepan, I can go across to him. Deepan, any thoughts here?
Yeah, while you were just, talking about this company, I just quickly checked up, and the biggest investor amongst the 4 is Artham Investment. It's a listed company owned by Mr. Sanjay Dangi, and they have a very good track record in terms of identifying stocks and multi-bagger stocks, and then nurturing those companies to scale up. And maybe something similar can happen in Merc Electronics. See, there's a lot of interest in this electronic and consumer product outsourcing. And even if 1 or 2 contracts come through to Merc Electronics, then certainly they can scale up the business pretty well. And there are export opportunities as well for such companies. So I'm hopeful that something positive will come out of this particular development.
Yeah, absolutely. We'll take a break here, Deepan. More stocks with you coming up in just a bit. We'll also get our technical experts in, Sudarshan and Mitesh, with what they want you to do. Stay with us. Okay, welcome back. There's 17-point indicated lower opening right now on the market. Sudarshan and Mitesh are with us with what they want you to do as we go into this 3-day long weekend. Gentlemen, good morning. Great to have both of you here. Mitesh, how are things set up? A follow through today or a bit of a sideways day?
Yeah. Morning, Prashant. So I would still bet that there is a good chance of follow through happening. One, we're still in that range of 24,350 to about 24,750. But the indicators on the 2 hourly charts have started to look up from oversold levels. So while the opening move is slightly soft, I think there's a good chance that we might hit the upper end of the range. As of now, we don't have any signals of a breakout beyond that. But the immediate flow looks like we might head towards 24,750. And if we clear it in this attempt, well and good, we'll look at higher levels. Otherwise, you might have a dip, and then again the market should start to try and test higher levels.
Okay, got it. Sudarshan, coming across to you. What's your view on the Nifty?
Yeah, good morning. Well, the view yesterday was to go and buy a dip. That was yesterday. This market is changing every day. Today, we are into a long weekend and a very big news event. Markets usually go into a huddle just before such a big event. So we could actually end up in a very narrow range today. Narrow range days are not good for intraday traders. And while, see, Nigel, anything can happen during the day. The anticipation is that we will not move either ways. So intraday trading and swing trading should be out. Don't touch the Nifty or any other index. Focus on stocks. For the next week, I have a trade. We don't know what the markets will do and what the news event will be. So buy a call and buy a put, but buy a strangle. Essentially, anything above 24,700 as a call and 24,400 below that as a put. And then see what happens. That's for next week. Today, avoid.
Okay, all right. Gentlemen, wait with us. We'll slip into a short break, come back. We'll get the stock picks from both Sudarshan as well as Mitesh. We'll also be joined by the management of CSB Bank.
Welcome back. Let's just waiting for the pre-opening rates to kick in. Let's get in a few trading ideas. Sudarshan and Mitesh are still with us. Sudarshan, morning. What would be your stock calls?
Yeah, good morning. Well, it's still an all-buy list. BPCL is a buy with a stop under 317. Overall Reality is a buy with a stop under 1596. Infotech, I'm not getting the name right, is a buy with a stop under 1094. K Financial Infotech, I think. Bharat Forge is a buy with a stop under 1157.
Mitesh, hi, morning. Your calls?
Yeah, good morning. So I have a few buy calls as well and one sell. On the buying side is Lupin with a stop at 1974 for targets of 2020. DMAR is something which I've recommended regularly over the last few days. That's a buy at current levels. Keep a stop at about 4,300. Look for a target of 4,400. Also a buy on NMDC with a stop at 71 for targets of 76. And Suzlon is one sell call. Keep a stop at about 62.25. Look for targets of 56.
Yeah, no, absolutely. Thank you, gentlemen, for joining us, and we'll chat again at about 9:10 or so. Rima, the other talking point, and on Editor's Playbook, we picked this up yesterday, which is direct flight between India and China. And essentially, if you see the momentum of events, the way it's panning out, seems like both sides are taking steps to normalize relations, India and China, right? And that's great news because eventually that may lead, easing of restrictions on those precious rare earth magnets, etc., right? So that's great news, and it's happening after 5 years. But is there a flip side to it, is the question, which... it's just food for thought, but something that I wanted to put out for our viewers. And these are the four things first up, right? Will Chinese companies be allowed to operate with much more freedom in India? That's point number one, as these ties normalize. Second, for most of the EMS, FMEG, capital goods companies, etc., China plus one was not really a big factor for why they did well. What actually helped them, and this is point number three, is import substitution. Right? Companies here making what you could import earlier, so substituting those imports, helped by schemes like PLI, etc., and restricting import of Chinese brands, OEMs, etc., restrictions on Chinese companies. So it was not China plus one. In a way it was, but not in the, the purest sense of that term, but it was, these other factors which helped. So if restrictions on Chinese companies has normalized, it's not as if China is going to agree to normalize ties if they don't get access to the market, right? They're the largest producer for pretty much everything on out there in the world economy. So they want access. That's essentially what we can offer. So will easing of restrictions on sourcing from China hurt Indian players? That is the question that I'm asking. And, just a couple of areas where this perhaps shows up. And these are all, and the reason why this is important is because these are all, high valuation sectors. Typically between 70 to 100 times earnings is where most of these, a lot of these sectors trade at. EMS, for example, and the names come up on your screen. Power equipment on the generation side, names like BHEL, L&T, Thermax. If you remember, 10, 15 years ago, Chinese import of power equipment, quality aside, was a big factor. And when that stopped and restrictions were put in terms of use of local content, etc., these stocks actually reacted quite favorably. So will that Will there be strict regulated entry if it is allowed? We'll have to see. Power equipment on the transmission and distribution side. I mean, well established that China has got huge capacities here, and the companies will come up on the screen. Again, these are all very, very richly priced sectors in that sense. And of course, I mean, you've got lots of emerging sectors like motors, EV chargers, solar inverters, smart meters, and so on and so forth. So it's just a question out there, which is, even as ties normalize and as great news, etc., I mean, you're not going to be able to immediately, at least till you build up manufacturing capacities, be able to sell into that market. I mean, US is the consumer, China is the producer, and that's the reality of it. So we'll see how this is done. I'm sure the government, of course, is very mindful of all of this to protect the local industry with whatever it can do in terms of measures, etc. Deepan is, of course, still with us. Deepan, I don't know if you have any thoughts here on this topic and how it plays out. Deepan, you have to unmute yourself, please.
Sorry. No, I think it's positive for the entire Indian economy if the ties with China certainly improve. There's a lot of scope for cooperation as well, and there are export opportunities as well. And certainly, I think certain Indian companies also benefit from Chinese technologies or from investments done by Chinese companies into India. So we remain hopeful. But end of the day, we have to focus on domestic-oriented businesses, as I understand. And these things keep on happening with China on and off, and then there's some skirmish, and then ties get worsened, and it does tend to create a lot of volatility if you are basing your investment theme purely on external partners. So that's what my thoughts are.
Okay, let's see how, for now at least, there seems to be some cautious engagement between the two countries. We'll have to see how they forge ties going ahead. But Dipan, hold on. We've got the management of CSB Bank joining in. Came out with numbers yesterday. The street was disappointed with the margin performance. A very sharp 21 basis points contraction in NIMs quarter on quarter. And on a year-on-year basis, margins declined by, close to about 80 basis points. The stock declined in trade. Pralay Mondal, MD and CEO at CSB Bank, is now joining in on the show. Thank you very much, sir, for joining in. This is Rima here. When we spoke last time, you sort of indicated the NIMs have bottomed out in Q4. We've seen further pressure on your net interest margins and now at 3.5%. What led to that? What happened in the quarter? And what's the guidance on margins now?
Good morning, Rima, and good morning to your viewers. You're absolutely right that NIM did decline by around 20 basis points quarter on quarter. And one of the key reasons for this is, the liquidity which was there in the system at that point of time was negative 3 lakh crore in last quarter of last year. And right now there is of course, positivity in terms of liquidity. And we picked up a lot of deposits in the end of the financial year last year, which came in at a slightly higher cost. That effectively had an impact only for 10-15 days last quarter, and this quarter it was for the full quarter. But it is we are seeing that the deposit rates are declining, and hence I think that pressure will ease off quite an extent. And hence Q2 onwards, we should see a more stable NIM. So I think this is a transient kind of a situation. We didn't expect, but I think things are getting better now.
Can you say with confidence that 3.5% is the bottom for margins, and Q2 onwards, the improvement will be visible?
Absolutely. I think this should be the bottom, 3.5, and we should be seeing gradual rise of NIM from here onwards. Our guidance is we should be gradually moving from 3.5 towards 4% over the period of the full year, with an average of around 3.7%.
All right. Hi, Mr. Mondal. Good morning. Good to see you in. Yesterday, the street was a little bit nervous after looking at your numbers because that compression clearly was more than expected. That said, are you seeing signs of credit growth coming back on ground if there was some slowness? You've mentioned in the past, you want to outgrow the industry. So for the year, what kind of loan growth should we be working with? If you could help us out with a rough range. And the ROAs, that's come down to around 1%. But you have mentioned in the past, 1.5% is where it's headed. For this year?
Yes, Nigel. On the ROA part, what I can say is if you look at our trajectory, it always starts low in the first quarter and it gradually picks up. Last year also the same thing happened, and it will happen the same thing this year because our income starts growing in the third and fourth quarter because of the cyclicality of our income, especially on the fees side. So I think we will be able to achieve the guidance of 1.5% for the full year basis. And also the other thing what was that we build up our credit book pretty strongly. If you see this quarter, we had grown our wholesale, SME, gold, everything by more than 30%. Retail, of course, we are cautious. And some of the unsecured book is only 3% or lesser of the whole book at this point of time. So from that perspective, obviously, when we grew the wholesale book very strongly, that also was another reason why we had a little bit of a contraction on the NIM, but that is something which we have taken a strategic call to ensure we have a balanced business between all the three businesses. So from that perspective, I think we are stabilizing, and I think our credit growth guidance is very clear. We will be growing at least double the industry at this point of time. And on a specific number, we should be doing somewhere around close to 25% for the year.
Okay. And in that, the loan book guidance, 25% on an aggregate.
Yes, around 25% we'll do it.
And for gold loans, the growth guidance would be?
It should be somewhere around 25 to 30. It will continue to do well as it is, maybe a little higher, but we'll see as it comes.
Okay. Any signs of stress, sir, in the book? As of now, that's the big fear, right? Credit growth is not picking up, and is there gradual stress building in? What is your observation?
No, for us, I don't think stress is a stress anymore at this point of time. Because this quarter, of course, our NPA went up a little bit because of some slippages on the SME side, which are all secured, and that should come back. We have already recovered at least 25 crores out of that slippage, which happened last quarter in this quarter. Also, what happened is, on your specific question, I think our overall guidance of with GNPA less than 2, NNPA less than 1, and credit cost less than 50, we are still below that. And where we are today, we'll end the year much lower than this on all the three parameters. But one specific thing that happened last quarter was we transformed the bank into a completely different trajectory from our tech perspective. So we implemented our core system with 52 surround system around it, and with many other tech transformations. So the team was a little busy on that last quarter. So from an execution perspective, we are focused on building the long-term platform of the bank, and hence some of these things we didn't focus as much as we should have. I think we'll come back strongly in the second quarter.
We don't talk enough about the technology-related investments, but as a business driver, that's a big one. We'll talk, come back mid-quarter, Mr. Mondal, and we can sort of have a chat. Thank you very much for joining us. Just running into market opening, so shorter chat this morning. Appreciate it. So that is CSB Bank with perspective on the results which came through. Sudarshan and Mitesh are with us with their 9-10 call. Sudarshan, what do you have?
That's KFin Technologies. So buy KFin Technologies with a stop under 1,094.
Mitesh, what about you?
I'll go with a buy on NMDC for targets of around 76.
Any thoughts on Muthoot, Mitesh?
Muthoot, see, we have a slightly negative outlook. In fact, disclaimer that, I had some position which I booked profits on the short side yesterday. But the chart still looks weak to me. I think the target which I'm looking at for Muthoot is closer to about 24.30 to about 24.20 on the downside. So some more downside possibly left.
Okay, 8%, 9% higher right now, though. Indicated in the pre-open session, 250,000 shares is the volume. So that's the, looks like at least this morning, the big one. But that's a technical view coming through. But the numbers recap with Gaurav. Gaurav, morning.
Well, yes, Muthoot Finance actually reported very great set of numbers and also was higher than the street's expectation across all the parameters. When we talk about AUM growth, that was at around 42%. Now it stands at around 1.2 lakh crores. When it comes to net interest income, now that has increased almost by 50% on a year-on-year basis. And there we saw an impact of around 400 crores. This was because of the recoveries from NPAs and also because of the recoveries and the principal that they received from ARCs. When we look at the PPOP, which is pre-provisional operating profit, that increased almost by 62% on a year-on-year basis now, and profit that has increased almost by 90% on a year-on-year basis. So very strong set of numbers is what we can say. When it comes to ratios, now net interest margins, they have increased almost by 88 basis points. Remember, management said that the yields have increased almost by 100 basis points because of the 400 crore impact that we just discussed. And at the same time, when it comes to the asset quality, there also we saw a strong set of numbers. Credit cost declined to just 0.15% versus what it was at 0.5%. Now remember, Street was actually penciling in 0.5% of credit cost in this quarter as well. So definitely a very good number in that front as well. As a result, when we look at the brokerages, they are being bullish now. Morgan Stanley, they have upgraded the rating as well as target price. They believe that the companies delivering group-leading ROEs and EPS growth, and at the same time, negligible asset quality risk is what they are seeing. CLSA also increased their target price to 2,740, and we also have Nuvama, who increased their target price to 2,993 because they also believe that the company is actually shining brighter than peers. So definitely bullish call coming up from brokerages as well, and as a result, we are keeping a watch on this counter today.
Thank you. We've got the management joining in at 9:30 a.m. George Muthoot will be speaking with us, so stay tuned for that. Let's go across to Mangalam now for Jubilant Foodworks. Mangalam.
Now, Jubilant Foodworks reported a good set of numbers. Remember, the company had already given us their quarterly update, so we already knew their revenue growth both on a standalone and a consolidated basis, and the Domino's India like-for-like growth at 11.5%. So what was remaining to be seen is how the EBITDA performance is and how the internals are of the company. The EBITDA, absolutely in line with street expectations, close to around 19% margins. The street was working with 19.2%. The net profit also around 65-66 crores. Bang in line with street expectations. The internals, they are positive. 11.5% like-for-like growth for Domino's, but that was led by 20% growth in the delivery business and 24% growth in their delivery revenue itself. And that's much higher than all the other aggregators. We had Eternal and Swiggy report their numbers. So it tells you that Domino's in the QSR space is gaining market share, and in the overall food delivery space is also gaining market share. Popeyes also did well for them. Remember, now they have 63 stores. They are targeting 100 stores by the end of this year. So Street likes it. The only fly in the ointment perhaps would be valuations, trading upwards of 75 times 1 year forward earnings. But there is long runway for growth. Let's see how the Street reacts.
All right. The other one, Mangalam, thanks very much for that, is Vishal Megamart. I think is opening about 6-7% higher. And that will come up on your screen as well. Just a quick look at that before we hit the market open. I think, 6-7% on Vishal Megamart. So, some positive reactions coming through. Big ones. Vishal and Muthoot, of course, seem to be the big ones that we will address. Market open is absolutely flat, 24,640, almost unchanged to where we left off yesterday. I think Nifty Bank is better, about a 0.25% higher. Nifty Bank was, okay, is it? Not really, is it? It's absolutely flat there as well. A bit of a divergent trend on Nifty Bank over the last 2 days as compared to the Nifty. So 55,200 on the Nifty Bank. Mid-cap index is 190 points in the green, 56,885. And you've got the small-cap index, which is also, coming up with gains about 0.25%, 37, 38 points, 17,650. 800 up, 400 lower. So that's the market breadth overall on the NSE. But it's just within the first minute of market that we're tracking. And that's the Nifty heat map. Bulk of everything is up in the green. 42 names are higher. One stock is unchanged, opening up just about. The others are low. But overwhelmingly positive, but nothing very large to begin the day. Prima.
Well, there's only one Nifty stock where the reaction is more than 1%. So things are quiet, at least on the large cap screen. Infosys is your top gainer, and that's got a gain of all of 1%. This is on the back of the company acquiring a 75% stake in a company in Australia, forming a joint venture. So it could add about 0.3% to the company's top line. The street likes the acquisition. Stock is up nearly 1.25%. Some other IT names are also higher. Gains are not big, but you've got Wipro, Tech Mahindra opening up in the green. Some auto names, like a Maruti Suzuki, have a positive green tick. Eicher Motors, higher in trade. HDFC Life, Adani Enterprises, throw in a couple of pharma names like Cipla, Sun Pharma, stocks in the green. On the way down, you've got Reliance Industries retreating a bit, so that's exerting pressure. BEL, ONGC, Eternal are some of the other drags. But again, nothing too big on the way up in terms of a large cap reaction or on the way down. Infosys is the only one which stands out post that acquisition.
Well, that's right, Rima. From the broader markets, actually, there's plenty of action. Yatra, the stock is up 50% in this week. It comes in for some mild profit taking. So that one's up for you on the screen. HPL Engineering, that's up 25% for this week. Well, that's also mildly lower, down close to around 2.5%. Jain Irrigation, it saw a big spurt in the final few minutes of trade. They got an order, I think so, but the street has sold into that. Maybe the size of the order is not as much as what the street sniffed. The other one is HPCL, that as well is down close to around 2.5%. So keep that on your radar. The stock of the morning has to be Muthoot. In a few minutes from now, we'll have the management who will be joining in. And, things looked good out there. I've looked at the yields. They have moved up. The cost of borrowing is down. The growth has been good. Hard to follow those numbers, even X of those, the one-off that we saw. The other ones that are actually not doing too well, Supriya Life, pull up that stock. I think it had moved close to around 5%. So Supriya Life, I think, is a little bit lower in today's trading session. Yes, it's down close to around 4.5%. Street didn't like those numbers. But there are other result reactions. Everest Kanto, stock is up 10%. Another stock that's been very, very flimsy from an investor perspective. Sometimes good, sometimes not so good. But that one is zooming away on large volumes. MIRC, as Nimesh told us, a couple of large investors coming in there. They are showing the faith. Remember, this is a stock that's half of what it was, if you look at it in the last 7 years or so. But big investors coming in there, they're showing in the money. The street is optimistic that could be a turnaround. So that one's in fact higher. And you have Jubilant Food as well as Bellrise, both of them doing rather well in this morning's trading session. So both of them up and about in trade today. A couple of other notable movers, I think so. We should get Genesis. That one has come in for some profit taking. The numbers look pretty okay, but the stock had run up in the last few days. So that's why that's come in for profit taking.
Okay, that's the screen for you right now as we open up trade. Let's invite Manishi Ray Chaudhary, CEO at Emerald Capital Partners, joining us on the show. Manishi, thank you very much for joining in. The situation is changing every day, but as we speak, it's about a 50% tariff, which India is slapped with. But there is hope. 15th August speech from Prime Minister Modi. Let's see what happens in Alaska. I mean, what's your sense about the Indian markets, its current positioning right now with investors?
You talked about, first of all, I wish, my best wishes to your viewers and to yourselves for a very happy Independence Day. And, it's a delight to be here. So first of all, you mentioned the tariffs, but I think investors, and particularly the foreign investors, are more concerned about the earnings environment. As I've been saying, that consensus earnings estimates for India have been on a downtrend for almost a year now, since last September, and it's been across almost all sectors. So I think this earnings estimate downtrend has to stop. Earnings estimates have to bottom out and then begin moving. It's difficult to figure out.
Okay, all right. I think we'll try to get Manishi back with us in just a bit. We're just having a bit of a technical snag out there, so we'll get Manishi back with us. Manishi, yes, I believe you're back. Go ahead and make your point.
Right, great, excellent. So, I think the impact of more cash in the hands of urban taxpayers and more money for the government workers, that should perhaps have an impact on on earnings, maybe in the later part of 2025, maybe in the fourth quarter and beyond. But investors would clearly like to see that happen before committing more capital. So, in a sense, India suffers from a relatively pedestrian micro, but at the same time, a great deal of macro stability with low current account and fiscal deficit, and now very low CPI inflation as well.
Manishi, you want to tell us how your Indian portfolio is positioned right now? What would your top bets be? And have you made any changes to your portfolio in the last 3 months?
Absolutely. So in India, currently in the Asia ex-Japan context, we are currently neutral on India. And within India, there are possibly 3 pockets where we have a strong presence. First, the private sector banks. I've been harping on this theme for quite some time, that these are the banks that are likely to gain market share. Their asset quality is a lot better. Their technological capabilities are a lot better. Second, industrials, and that includes defense, though one has to be a bit selective here as a consequence of the high valuations that are prevailing. And third, consumer discretionaries, which is a combination of the automobiles, particularly four-wheelers, and other areas of discretionary consumption, which would also include healthcare services like, the diagnostics and the hospital chains. So these are the major areas, and 2 sectors that we are avoiding right now are consumer staples, where we think that single-digit growth going forward does not really justify the kind of valuations that they're trading at. And second, IT services, which we have completely taken out of our portfolio just about, I think 3 weeks ago. I think this, the reduction in manpower announcement by TCS as kind of a canary in the coal mine, which basically tells us about the kind of pressures from AI and, the lack of demand from the Western Hemisphere that this sector is likely to face.
Muthoot is locked up, guys, right?
Yeah.
2760 is where, that stock is at. What a move. I mean, that's the thing, right? I mean, stocks can frustrate you for a long time. And I remember this phase, stock did nothing for almost about 2 years, 2021 all the way to about 2024. Actually 2 years, 1400, 1500, 1400, 1500. And very quickly it's doubled. Similar thing with what the name, Nigel, you were mentioning, HBL Power.
Yeah.
6 months, 8 months, nothing, right? I mean, it's made a lot of money for investors from the lows, different sectors. But last 1 week, it's kind of more than made up for the underperformance. 25% very quickly, back at all-time highs. So, it's you got to be willing to sort of sit through phases of underperformance for stocks to work out. Anthem is another one. I don't know if you guys mentioned it. Anthem is up 7%. It's a recent listing from the CDMO space, but 805. Again, one of those names which has done phenomenally well. Anthem Biosciences. Pfizer is coming up with a 7% pop. It's got volumes on it as well. So 5,500 rupees in Pfizer, but it's got super gains. Premier Explosives went away home yesterday, limit up. It's got another 6.5% right now. So that's super, super strong. On the back of Muthoot, Manappuram is up 3.5% as well. So 265 on Manappuram. Bajaj Housing Finance. I think, Nigel, you were talking about this yesterday with a guest, right? 4% higher on Bajaj Housing, 113 on that one. And it's coming up with strong volumes as well. And out of the blue, there is Prime Focus, which is shooting up 8%. Prime Focus, $160. And the only reason I'm mentioning it is because it's got strong volumes behind it. So, 1,500 stocks are higher and about 900 stocks are lower. At this point in time. Vari for the second day running is a top volume-led loser on the NSE. Vari is down about 3%, so keep an eye out on that one. And you've got a couple of other things which did extremely well yesterday, which are coming, seeing some profit booking. JM Financial did extremely well, and I think it's down about 2% or so at this stage. Manishi, any thoughts on this entire CDMO or CRDMO, is whatever you want to call it? Contract research development in the pharmaceutical space, any stocks you like and valuations, risks to the business because of what's happening in the US? Your thoughts?
Right. Now, see, honestly, contract research, contract development, CDMO, these are possibly the themes of the day. And we're seeing this not just in India, but also in China. In fact, in China, it's the reverse. It's the foreign companies, the overseas pharma majors, they're trying to license the drugs developed by the Chinese majors, right? So, I think China, in a sense, has reached this second or the third stage of development. India is possibly about 7 to 10 years behind. But broadly, I would think just like most other research outsourcing trend that we have seen, and we have seen in case of the GCCs, the Global Capability Centers, this is also a trend that's likely to remain alive in the Indian healthcare sector for the foreseeable time horizon. So it is something that, the investor would have to keep a focus on, apart from the usual generics that he plays in the Indian pharmaceutical sector. In fact, I would think that contract research, contract development would possibly be less at risk from the tariff and the trade dispute scenario than the generics would be.
Okay, all right. Thanks very much for joining us. Manishi, appreciate your time and happy Independence Day as you sort of began by telling us. Good speaking with you here on CNBC-TV18. Let's talk about the big story, the big stock, of course, which is making all the headlines, which is Muthoot Finance. Stock is up about 10%, limit up. There's an upgrade coming through as well. Morgan Stanley is upgraded their rating to an overweight call. Price target is now about 2,900 odd rupees. Loan growth is 42% for Muthoot. We have the management joining us now, as always. and we'll ask them if they now, after these results, want to upgrade their own assessment of what growth will be for the year. George Alexander Muthoot, welcome to the program. Thank you very much for joining us. So, we'll ask you what happened and what led to this super strong growth in the quarter. But let me ask you, do you want to, you always said 15%, but we'll probably better it. You want to put a higher guidance number out now, Mr. Muthoot?
Thank you. Good morning. First of all, happy Independence Day to all of you. So, Prashant, I don't want to change the guidance now. We've always said the 15%. Give us a little time. So usually we change the guidance after second quarter. So give us a little time. But definitely it will be much better than what we said, 15%. There's no doubt about it.
So, yeah, 20% plus, right? More like, and in October you'll do it.
Yeah, 15% plus is what I said. That is not limited to 20%. Can be even better. So we will discuss on it after the next quarter. Anyway, I'm also here next quarter.
No, I will not push you. But you said it yourself, sir. Could be 20% plus also for the full year, and why not? Looks like it. The numbers are very strong. But you'll do it in the second quarter, along with the second quarter numbers when you report these, right? Yeah. So just a quick word on what happened in the quarter, what led to the very strong growth?
In the last 2-3 quarters, I think quite a few things have actually come into place. One of the things, as I've always been said, has been good demand for gold loan because of the overhang or the difficulty in getting unsecured loans everywhere. So that is one thing. The second was definitely the gold price and also the momentum about gold and about the talk of gold and people having gold and people using that to get. And the third and one of the important things was, again, the regulatory action which came by revised final guidelines. The final guidelines, if you ask me, has been quite good and it is quite gold loan business friendly. When I say gold loan business friendly, it is helping the gold loan business not only for the customer but also for the NBFCs and the banks. So the regulations which came gave a boost to the regulatory overhang which was always there. Was whether the finance ministry, whether the Reserve Bank is keen to promote the gold loan business. So I think from the regulations which came, the message I get is that the finance ministry and the Reserve Bank is keen to promote gold loan business, of course, in a very structured way. And most of the regulations, other than that, is mainly to give healthy growth to the system and also guidance to especially the new players who are coming into the gold loan sector. So overall, these combination of factors has been helping us in the last 2 quarters and last 2-3 quarters, and this quarter also the same thing helped a little more.
Record highs for the share price today, Mr. George Alexander. This is Rima here. What about your margins, your NIMs or your yields? It expanded by nearly 100 basis points in Q1. What led to that? Is it sustainable, or do you think coming Q2 we will see a decline in your yields?
See, the yield definitely, or yield always has been in the 18.5. The blended yield has always been 18.5. This time it is a little higher. The two things happened. One, we had the NPA write back or NPA decrease was about 700 crores, and the interest which was the accrued interest on that which has been coming into the P&L constitutes about 275 to 300 crores. That is one. And number two, we had done an ARC about a year back, and all the capital has been received earlier. Now, what we received about 100 crores this quarter, just has gone to the P&L. That is the interest part. Probably another 100 crores should come in the next quarters also for the ARC, which is a facility we gave for the customers. Instead of auctioning the gold, we gave them time, and many of them were able to save their gold. That is the biggest advantage. Finally, we got our interest also. So these two factors increase the interest collection. There is a bump only for this year. So it's not that the yield would continue to remain in the 18.5. This quarter, it is 19.5. So that is just because of this extraordinary income which came.
All right. Hi, sir. Good morning. Good to see you in. When you see any kind of regulatory hurdles, it's actually proved to be the best time to go ahead and buy your stock. That's at least what evidence tells us, because that's the way the stock has recovered from the recent low that we saw earlier this year. That said, the numbers look good, and it seems like a blue sky scenario playing out. Yields are improving, cost of borrowing is going down. What are the NIMs we should work with from here on, if you could help us out with that? And we'll wait by to revise the growth guidance. But in terms of your gold and non-gold portfolio, what should the mix look like?
Our spread has always been 9.5, and probably this quarter there's a bump. I think we'll continue to maintain the spread at 9.5. So when you say the cost of funds really has not started coming down because banks have not reduced their MCLR as yet. Probably this quarter and next quarter, they will be gradually reducing the MCLR, and our cost of funds may come down by 40, 50 basis points. But having said that, if our cost of borrowing is coming down, we certainly will pass it on to the customer and reduce our yields also, but maintaining the spread at 9.5%. Now,
okay. The spread, the mix, sir? Mix?
The mix, yeah. So today, if you take out the microfinance portfolio, which is about 7,700 crores today, which was about 10,000 earlier, now it is only 7,700. All other, the personal loans, the home finance loans, etc., together constitute about 5,000 crores. So it's about 5% of the total portfolio, other than the microfinance. So overall, we would like to maintain, including the microfinance, today it's about 12 to 12%. Maybe 15% of the portfolio should be in the non-gold sector.
Okay. By when, sir? By the end of this year itself?
No, see, if the gold business is growing very fast, our preference or priority will be to support the gold loan. And we are also building our non-gold portfolio, whether it is the home loan business or the personal loan business or the business loan business. So we are building that gradually. But gold loan, we are there always, and we will keep no stone unturned to see that the gold loan business does the best possible.
All right, so what about Belstar?
Belstar,
Now, Belstar has a couple of questions. How do you see the unit function going ahead? And I think the second part of the question is that the value unlocking, will we see an IPO in FY26 itself?
Yeah, so the Belstar had a portfolio for 10,000 plus. Now it is about 7,000 plus. So in the last 2 quarters, they have been, they have been recalibrating the portfolio, and so the microfinance is coming down there. But it is stabilizing. I should see it's stabilizing after. This is Q2. After Q3, the business should stabilize. Not only for Belstar, for everybody. But the recent regulations have got a good fillip to it. Is that it said that 40% of the portfolio can be non-microfinance. So non-microfinance we can do, of course, because it is as a promoter's Muthoot Finance. We have certainly started doing gold loan. We opened 10 branches last quarter, and this quarter we plan to open another 50 branches exclusively for gold loan. So we will have a mix of gold loan and the microfinance in the Belstar. So going forward, it will give a little strength to the total balance sheet so that we have some sort of secured lending as well as the unsecured lending.
So in microfinance, and I think you did allude to last time we spoke, would you, from your perspective, say the worst is behind microfinance?
Yes, the first is behind because everybody has now started a little more, little more calculated and responsible lending. All the players have started.
But banks are willing to lend to MFIs, sir? Or is there a problem?
All the MFIs have started more responsible lending because everybody has...
No, I'm asking, are banks lending for MFIs to be able to lend?
I think so. For us, we are concerned. Our MFI is double A plus rated. So bank funding is not an issue for us. But of course, I also read in the papers that banks are not a little wary about lending to lower rated NBFCs. That I have read in the paper.
What about Belstar IPO, sir? You didn't clear the point on that. This year we're expecting it. You took me a little bit round, but you didn't tell me. Is it going to be in quarter 3, quarter 4? Should we brace for the IPO?
No, I think because now, as I said, the AUM is coming down. The AUM, which was about 10,000, has come down to 7,000. So, in fact, at this point, we don't need any extra funding. Probably it should be quarter 4 or next quarter 1.
Okay, but is it a size, AUM size that you're looking at? Say if it gets back to 10,000 crore.
It will depend on the growth we see in the microfinance. So, as I said, everybody is doing responsible microfinance lending. We also will be doing responsible microfinance lending. And at that point, if we need capital, we'll go to the market. I don't think it is that difficult, even at that time, to go to the market. So, at the moment, for next 2-3 quarters, I don't think IPO is necessary for Belstar.
Absolutely. Mr. Muthoot, 20% plus. You've given us a hint, a growth for the full year. But next quarter, at the end of the next quarter is when officially you will change the guidance.
It's not the 20% plus, it's definitely more than 15%. Not necessarily 20%. It can be even higher also. So let us keep it there. Let us not have a guidance.
So what was
let us keep it there.
What was the industry growth for gold loans, particularly in Q1? Yours was 40%.
Everybody is growing. All the banks are also growing their portfolio. The market is really improving. The total business of banks is about 13 lakh crores. And what is about 3 lakh crores. So banks have a much bigger portfolio.
And what a change it has been, right? We were talking about regulations 2 quarters back, restrictions on gold loans, and government is not too happy and all those kind of things, and it's completely turned on its head in terms of what is required and what needs to be done. There's a policy push as well, as you alluded to.
I think it is mainly because this serves the community well.
Yes, absolutely,
People have realized that it serves the community well. And I've been shouting from the rooftop that this is a small loan.
You have been. As the oldest player, and I think we've been taking that point on. Yeah, as the oldest player, we've been taking that point on board as well. Thank you very much for joining us. Great speaking with you. Really appreciate it. And good luck, sir. We'll speak again. Just a quick, maybe dip in on the JSW Cement listing. I think we have visuals, and Mr. Sajan Jindal is speaking at the NSE. And maybe for 30 seconds, we can kind of sort of dip in.
Group, and we can't be conservative. We have to be aggressive, and that's what India requires. India needs aggressive companies. India needs growth. So therefore, I hope that's what JSW will do that. And I know that his mother Sangeeta has also always is very, very supportive and must be very proud. He's very proud to see him carry forward the values and with such strength and dedication. So she has been always a great strength, and so has been Anushri, who has always been on the side of Parth.
Well, I think Parth Jindal earlier spoke, and he said that it's a nice quote, if I want to live with my father, I better take this company to the number 2 position. That's JSW Cement. So listing today, and I think we'll have more for you a little later. Nigel.
Well, and Parth is, to be fair, he's earned the position, right? Because when he came into JSW Cement, it was much smaller. Everyone said, father is such a great man, we need to listen to him. But he turned it from a loss-making entity into a profit-making entity, and he scaled it up substantially as well to 20 million tons. And over the last 10 years or so, whenever I've spoken to him, asking, when is it happening? And finally, that moment has arrived. Came in at peak valuation, JSW Cement, but it got lapped up. Investor interest was high. We'll have to see how they go from here. But getting to number 2 is not going to be an easy task, because you have the Adani Group that's going to be at around 150 million tons. They're at 20 million tons, going to 40 million tons. And Ultratech is at around 215 million tons.
So they're not even...
So what he told me is that we're the 9th player right now. So we're price takers. But the top 3 are very hard to move right now. They're giants. So our best bet right now, or goal, is to be the 5th player. I mean, that's the spot that we will be looking at. But let's...
Fifth is realistic.
5th is what he's...
I think second will be a little bit tough. And as he said, right, Earlier, we didn't have, the bandwidth to go ahead and, in fact, bid for some of these assets. But now they're looking on to take on the Adanis as well as the Birlas. Well, let's focus on, we'll keep dipping in there. We'll get you the, I think the premium should be around 6-7 rupees or thereabouts with regard to the listing. So we'll wait by for that. Max Healthcare, that's the next company on radar. Reported actually a steady performance. Occupancy growth was largely flat. Margins came under some pressure. International patient revenue, though, rose by close to around 32% on a year-on-year basis. We have Mr. Abhay Soy, the chairman and managing director, who joins us on the show. Hi, Abhay. Good to have you, and thanks a lot for joining in. Well, occupancy as well as ARPOB, both of them were flattish in the past quarter. Tell us what went on and what's the outlook on both these two parameters?
Well, as you know, we've expanded quite sort of dramatically over the last 15 months, and we've added about more than 30% capacity. In the last year alone, we've added 2 hospitals. One is Dwarka, which was a greenfield project, and which we commissioned in July. And we acquired JP Hospital in Noida. This was in October, November. So this is what I categorize as newer hospitals. So if I see existing hospitals, then you had an increase in EBITDA per bed. You had of about 7%. You had an increase in ARPOB of about 5%. There's been an expansion of margins as well from 25.8 to 26.2. But the 2 new existing hospitals are operating presently in the first year at about 12.5% EBITDA margins. And, they've sort of, as expected, would drag the overall ARPOB down, at least in the first couple of quarters. And as these ramp up, and that's exactly where the opportunity is, both the margins as well as profitability will expand from here on.
Mr. Soy, so the 2 new hospitals, Dwarka and Noida, you said margins are 12.5%. As they ramp up, say exit margins for these 2 hotels, what would it look like by the end of FY26?
Well, by the end of it, it should track at similar levels as the rest of the sort of portfolio that we have, because we only categorize hospitals. We have a fairly aggressive sort of this thing. We categorize only hospitals which are 12 months old as new hospitals. So yeah, by the end of the year, they should be ramping up closer to the rest of the group.
Okay. And international patients growth really picked up for you. Very strong traction seen, up 32% revenue growth from international patients, 9% of your revenues. What led to the pickup and what can you guide here?
Well, we normally don't give a guidance, but if history is anything to go by, I think last few quarters we've been growing at more than 25%. Yes, it's been more than 30% this quarter, but 25 to 30% seems like a decent sort of growth rate that we've been sort of getting in the past, and I don't see any reason for that not to sort of continue.
Abhay, hi, good morning. So as a percentage share, Abhay, you want to leave us with a number? Where do you see it by the end of the year?
Well, it's presently 9% of revenues, and why I stay away from percentage share is because we also dramatically increasing capacity, as you're aware. So, if our capacity goes up is expected to go up by 30% in the next 6 months before the end of the year. And that should actually bring down the total share, because if your capacity is going up by 30%, and let's say if your international business is growing by about 25 to 30%, then it should marginally reduce, go up, or remain the same. But, apples to apples, it would grow otherwise.
Max at Home, which is your home healthcare business, and Max Labs, the diagnostic business. Could you give us an indication of how they're likely to perform in the balance 9 months, and even on margins picking up for Max Lab? I think currently it's about 13%.
Well, we've been investing for growth in these businesses. They've been consistently growing at 20% plus for, I think, many, many quarters now and for many years. And I see that sort of keep expanding. I see the margins, of course, grow in the lab business closer to where the peers are. The home care business gives more than 20% margins, so we're quite sort of healthy margins. These are low return or very high return on capital, because there's hardly any capital required. At least for the labs, we use our own labs at the back end, the spare capacity in our labs and so on. So this should ramp up pretty well. But yes, I think, even whilst the rest of the sort of sector, a couple of years back was kind of dipping. But, we've soldiered on. We've seen a similar sort of revenue growth, which is 20% plus.
So for Max Lab, these are the steady state margins, 13%, assuming the 20% revenue run rate continues?
No, so like I mentioned, this should move up. They should move up to 17%, then 20%, and so on. So I see this going up. There's no reason for it to kind of remain at 30. As we sort of keep investing, so long as you keep building critical mass, and when you invest is a smaller component of what you have on the ground, you're going to see margins grow. Because when you set up new points initially, like I mentioned, margins will suppress, but that's investment for growth.
Is there any inorganic growth, Abhay, that you're looking at?
Well, these are very high value, very sophisticated sort of labs that we run. So you must keep in mind that all of the high-end work we do, all the super specialty work that we do at our hospitals, all our senior clinicians rely on the efficacy and efficiency of our labs. And so you have to find sort of similar sort of quality labs out there for us to sort of do bolt-on acquisitions. That is something we always look forward to. They tend to be far and few, but of course, when the opportunity arises, we're quite open to it.
Just one last question on the international patients, Abhay. Before 2019, did not just you, but I mean hospitals, were Chinese patients a big did they make a meaningful number of international patients seeking treatment in India, or not really?
No, never. So actually, I don't think that Chinese patients do come to India. They have a fairly robust government hospital sector, which the public hospitals over there, also parts of them do private work. But most Chinese people go to government hospitals. They have a far bigger reliance over there on government hospitals. So China has never really been a source of patients. Having said that, I think, we are seeing now also influx of patients from developed countries. Earlier you were seeing them from the Middle Eastern cluster, the African cluster, the SAARC countries, the Eastern European cluster, where it was self-pay. It's not necessarily patients which were sponsored by the government or by the insurance in their countries. But now, given the huge waiting lists over there, we are seeing some early signs of patients. And India really, I think, being able to tap its comparative advantage as far as healthcare is concerned.
Abhay, we'll leave it there. Thank you very much. Good luck with the business. Appreciate you joining us here, as always, on CNBC-TV18. Thank you. Markets are down. Markets are up 38 points, 40 points, off the highs a little bit, 24,657. I just want to make a mention of 2 or 3 names maybe. CSB Bank is down 8%. That's a large cut coming through, $350 on CSB Bank. Sami Hotels, actually we've spoken with all these companies. Sami is down 4%. It's coming through again with a large cut. There is HPL Electric, which is down 11%. That's a very large cut coming through on HP Electric. And Deepak Nitrite is down about 4% as well. Actually, if you look at the advanced decline, it's kind of flipped, more down than up if you look at the all NSE list at this point in time. And many more new names into the mix, which we will address in a bit from now. Take a break. NHPC management on the other side with their first quarter performance.
Well, let's focus on NHPC. The stock is a little bit lower, I think, in trade in reaction to its Q1 numbers. The margins disappointed, but revenue saw a growth with the power generation also double-digit growth. We have with us Mr. Goel, the Chairman, Managing Director, and the Director of Finance who joins us on the show. Hi, Mr. Goel. Thanks a lot for joining in. Well, in the first quarter, we saw 11% generation growth. For the year, what kind of a growth are you seeing? And how is the overall demand-supply scenario panning out right now?
Since we have commenced our Power 2 in current year, and there is increase in generation of Power 3 also, and we have already commissioned 214 megawatt of Bikaner solar project. So we are seeing a growth of around 15% in the generation in current financial year, and the similar growth will be in the revenue. And PAT also.
Parvati sir, how many units have been commissioned? When do we see the entire, the entire facility, all the units getting commissioned? If you could tell us, and what kind of contribution can it give to your numbers?
We have commissioned 3 units of Par 32 on 1st of April 2055, and balance 1 unit has been commissioned on 16th of April. So all the 4 units with 800 megawatt has already been commissioned, and it is generating very well.
What is the expected contribution, sir, from Parvati for FY26?
For FY26, we are expecting around 500 crore of PAT in current financial year.
Okay. And for Subhanshri, when can we, you've got 3 units which you plan commissioning. When will that happen?
We are ready for commissioning with 3 units as of now. But due to pending clearance from the NDSA, we are likely to commission 4 units in the first week of October 2025, and balance 5th unit will be commissioned in January 26. So during current financial, we will commission 5 units with 1250 megawatt of capacity, and balance 3 units will be commissioned in the coming financial year, one by one.
The National Dam Safety Authority, the NDSA, visited the project to review plans. Have there been any demands, any cost escalations, any upgrades you need to do here before you commission these?
NDSA visited in the month of May, and they have given certain tasks to be completed before commissioning. So we are working on those items which have negligible cost, but it will be completed in September month itself, and we are expecting visit of NDSA in the month of August itself. So we are very sure to commission this project in the month of October 2025.
No, got that. You established a dedicated, a renewable energy arm, NHPC Renewable Energy Limited, NREL.
Yes, you are right.
What's happening there, and what is the plan? I think you indicated some separate listing as well.
No, there is no plan to list this company, because the capacity is yet to come in this company. Basically, we are a hydro company, and we are focusing on hydro, particularly after this IWT suspension. So we are doing little bit in solar and wind, but we are doing solar business in NXP itself, holding company itself, and we are doing the work in RIA mode.
Sorry, what is NREL going to do then, sir? Because this is renewable itself, right?
Yes, it is also renewable, but hydro is also very much renewable, and we are focusing on hydro more.
Right. No, so what will NREL do?
NREL will do solar projects in future, depending upon the viability and considering the return on equity at least 12%. Otherwise, we will not do solar project below that 12% return on equity.
Right. Got that. So nothing really firmed up. I mean, you'll do it if it's viable, as you said.
Yes.
Okay. Now, CAPEX target for the year stands at about 13,000 crores. It's about 13% higher year on year. Could you give us a sense of how much has been spent?
Yes,
and is there any change to it?
Last year, we incurred 11,600 crore as CAPEX, and for current year, it is 13,000 crore. We have already incurred 3,700 crore up to and in the first quarter, it remains at lower side because of monsoon. But in the coming period, we are very much hopeful to achieve the target of 30,000 crore.
Have you set a long-term 5-year CAPEX target, sir?
Yes. We have CAPEX target for next 10 years, and it is in the range of 13,000 to 15,000 crore annually. During current year, we are going to float tenders of around 5,500 megawatt capacity in hydro, considering Sawalkot 760 megawatt, Kamla 620 megawatt, Subansiri Upper again 1800 megawatt. We have already floated tender for Durasti stage 2 and Uriban stage 2, taking together capacity of these 2 projects 600 megawatt. So our CAPEX is very robust, and the coming decade is for hydro only, because renewable is coming in big way, and to support the grid, hydro is must.
Okay, we leave the conversation here. Thank you very much for joining in. ICICI Bank, by the way, had opened in the red and now is back in the green. It's got a gain of close to about 0.5%. So following the customer feedback, remember, they've lowered the minimum account balance to 15,000 rupees. The stock has moved up. Infosys continues to be the top Nifty mover, 1.5% up. Mitesh is now with us. Mitesh, quiet start, but it's got a positive tilt, at least the Nifty and the sensex.
I think, the Bank Nifty is doing well today. And as you were highlighting, I think a couple of IT names have, also supported the index. So in fact, on the trading side as well, I have a buy on LTIM. Keep a stop just below today's low of 5127. So 5125 is what I recommend. I think we could see a reversal here, which could see the stock head towards 5260 plus levels. The other one is again from the IT name, that's HCL Tech. Here I would recommend buying once it starts getting past 1510. We got a high of around 1507 today. So buy about 1510, keep a stop at about 1490, look for targets of around 1550.
Any view on Reliance Industries?
See, Reliance has gone through a big decline, and there is a pivot around these levels of 1360. It's been holding on to that level for last 4 or 5 sessions. If you go back to the last week's price movement, it bounced back around this 1360 level. So as long as that is holding, good chance that we'll see a bounce back to about levels of 1420. Above that, the trend will reverse on the positive side.
Okay, all right. Thanks a lot for that, Mitesh. Well, those are the visuals that are coming in there from the NSE. Mr. Parth Jindal out there, Sajan Jindal, the little girl out there, family member as cute as ever. And Mr. Rao is there, Mr. Sheshagri Rao as well, that's been instrumental in building the CSW group as well, has made it, and Mr. Ashish Chavan as well of the NSE. So the bell is rung. The stock lists at a mild premium in comparison to what the IPO price was at around 147. Valuations are not cheap. The street is looking ahead from 20 million tons. Parth wants to take it to around 40 million tons. He wants to be a larger cement player. And he said he'd rather build than buy. That's been the motto. And he's expecting a big turnaround here for the company as well. Debt goes down as well. Interesting to see how things pan out. Not cheap, but for the time being, opens in the green. That little baby out there, that's the one that catches my eye.
That's Parth's daughter there, which is, and I spotted the CEO of the business, JSW Cement, Nilesh Narvekar.
Yeah, he's there.
He's there.
I mean, he's along there with the, with the entire team next to Mr. Rao. So yeah, absolutely, and it's a momentous occasion. One more Jindal group. As far as the listed space is concerned, and one more cement company for Nigel to track. So 154, about 5% higher, and look at the volumes coming up. That's basically photo ops now. More in terms of valuation comparison, etc., through the course of the day as we go along. But for now, we'll take a quick commercial break here. Manisha is going to be with us to run us through the commodity action that she's watching.
Welcome back. Midcaps is slipping a bit. It's down 250 points in the midcap index, so 0.5% lower. You've got visible cuts coming through in HPL Electric. CSB Bank is under pressure. NMDC is weak. Brigade Enterprises, EIL, Max Healthcare. We just chatted with the management. Yatra Online. These are some of the stocks which are weak in trade. But let's talk about commodities. Manisha is now joining in. Manisha, what's the one commodity you're tracking today?
Well, I'm looking at a data really, Rima, because this is interesting. We all have been talking about on how so many sectors will be impacted with the kind of tariffs that US has put in. And gem and jewelry sector clearly is on the top 2 there. When you look at the numbers, well, nearly 30 to 35% of our gem and jewelry exports go to US. And interestingly, the data for the month of July has come in, and that shows that the exports from India for various gems and jewelry actually has been surging ahead of those tariff expectations. So when you look at the month of July, we've seen rough diamond exports gain up by 32%. Polished stone was up 22%, and that is a surprise that you have in the last number. 83% of a jump on a month-on-month basis. This is what we've seen in sense of lab-grown diamond exports. These export numbers are to various countries, including US and UK and UAE as well. And we're looking at very strong numbers there. So when you look at the overall exports, those gained up by 15 or 16%, and imports were higher at around 26.5% as well. So very strong numbers in July. August, of course, is a bit of a question mark with 25% tariffs already on, and we're looking at or staring at 50% by the time it's 27th of August. What the street also is looking at, very strong numbers in sense of cut and polished diamond. Those exports were up by 18%. You have polished lab-grown diamonds up 27%. Gold jewelry also saw some gains with nearly 17% of a jump up coming in for that. And then you have platinum jewelry, which also gained up by nearly 14%. What did not do so well was colored gemstones, just about a 2% of gain. And silver jewelry exports actually declined 2.5%. So clearly, more people bent towards gold and diamonds with those prices rising, and not so much for silver there. The buyers clearly seem to be stocking ahead of those tariffs, is the narrative that comes in from these July numbers. 25% tariffs already on, and we do understand from various exporters within the sector that the trade is quite at standstill because the margins in jewelry are at about 1 or 2 and maximum 4%. 25% is something that they can't absorb, and 50% they tell us is a non-starter. If that comes in, then there is going to be serious trouble coming in for the industry. Also, when you look at the previous financial year, we saw $13.2 billion worth of Indian exports when it comes to cut and polished gems. Out of that, $4.8 billion were just to US. So very strong numbers is what we're looking at. But whether or not August can continue, or what is the kind of numbers that we will see, that would come in about in next fortnight or so.
Right. Thanks very much, Manisha, for that. So keep an eye out on headlines coming out over the next 24 hours. Will be consequential for commodities, definitely oil in particular, but others as well. Market breadth is now decisively turned. About 1,500 stocks are lower and about 1,100 stocks are higher right now. That's the market breadth. And, NMDC is the number one volume-led loser. But there is Garden Reach Shipbuilders, which is down 3%. Yatra is down about 3.5%. HPCL is down 3%. KRBL, Deepak Nitrite. It's a whole list of companies there. HPL Electric, I mentioned earlier, it was down 10%. It's down almost 13% at this point. CSB Bank is down 7%. So that's a very sharp cut coming through. SAMI, I mentioned earlier. So many actually names which are coming through. EIL is down 3.5%. Aarti Pharma has had a tough week. This one, about 4% lower. SPML Infra, 3.5% down. And all these, by the way, got volumes. Oh, dear. Look at Surya Roshni. Surya Roshni is down 7.5%. And it's just completely sunk. For the week, it's down about 11%. But from the recent highs, 10 days back, stock was 350 and it's at about 280 rupees now. I'm assuming it's earnings-related reaction. We'll check up and get back. But there's a fair bit of sort of price damage which is happening in mid-caps and small caps out there.
Even where you had good numbers, like Vishal Mega Marts, opened 4-5% higher. Now it's completely flat. Jubilant Foodworks is flat. United Spirits is on the verge of breaking into the red. Well, get into a break on that note. On the other side is our special segment. It's the Economy. Lata discusses with economists Aditi Nair and Bandhan fixed income head Suyash Chaudhary if Indian bonds are crashing because of fiscal deficit fears.